Hey guys, welcome back to Smart Wallet and Me, where financial wisdom really matters. Today I'm going to be discussing about the overall economy and about what's really going on right now, and to give you guys some top headline news around the world, including the United States. But before I get started, I would like to mention that I would like to get 100 subscribers before the year end. So if you guys like this video, please give it a thumbs up, and also please remember to subscribe to my channel and share it with other people. I would really appreciate it. Alright guys, so let's get into this. So today the stock market was very choppy. It went up and then it went down, and then the news came out that Nancy Pelosi and Stephen Mnuchin came up with an agreement to renew talks about the stimulus package, and then later on news came out that nope, they're not going to talk, and things just went down, and then the stock market went down again. So the stock market today was mostly flat. It ended flat. S&P 500 was up 9.67 at 0.3%. Dow Jones 5231 was up 0.2%. And the Nasdaq 3928 up 0.37%. Gold was up $6.80 and silver was up only a quarter. So not a lot of movement there. As far as the House Democrats go, they are preparing to create a $2.4 trillion stimulus plan with unemployment aid and direct payments to Americans. As you know, there's been a stall for many months now regarding the Republicans and the Democrats to come together with some kind of resolution to help the American people, to stimulate the economy again, to have direct payments to Americans as they did a few months ago. And now there's been a stall where Republicans only want to spend about $1 trillion and the Democrats want to spend $2.4 trillion, and now they're going to prepare the bill so that it will pass the Senate. The chamber could vote on the legislation, which would include unemployment benefits, direct payments, small business loans, and airline aid as soon as next week. Democrats aim to restart stalled aid talks with the White House. So because this talks kind of failed today, the stock market also took a hit, and I think that there's a lot of movement going on in the stock market based on the stimulus talk, and people just need more money for them to be able to survive and to get along with this whole coronavirus situation. The bill would include enhanced unemployment insurance, direct payments to Americans, paycheck protection programs, small business loan funding, and aid to airlines, among other provisions. And the Democrats would chop roughly $1 trillion from their previous proposal for a fifth pandemic aid plan. Okay, and then the Goldman Sachs came out with their GDP view. They're basically saying that their growth plans for the U.S. is now slashed in half from 6% to 3%. Which is a 50% drop in their growth outlook for the United States. Economists at Goldman Sachs cut the U.S. growth forecast for the fourth quarter in half to 3% from 6%. And they said that we think it is now clear that Congress will not attach additional fiscal stimulus to the continuing resolution. This implies that after a final round of extra unemployment benefits that is currently being dispersed, any further fiscal support will likely have to wait until 2021. And just for you guys to know that the government federal fiscal year begins on October 1. So we are approximately 6 days away from the government fiscal year ending. And so if they don't come up with some kind of plan, then it's going to have to be pushed to the following fiscal year of 2021. And the Goldman Sachs economists are saying that they're not going to have this because they don't think that anything is going to be passing anytime soon. As far as Europe is concerned, Europe is facing a double-dip recession as the coronavirus second wave arrives and makes landfall. Basically, economists predicted a rebound in the second half of 2020, but they are now questioning those forecasts, and many governments are announcing new lockdown restrictions or a slowing down of reopenings as they deal with a significant uptick in cases. And the warnings are similar for the UK, where the government announced Tuesday that pubs and restaurants needed to close early and workers needed to stay at home if possible rather than commuting to the office. The Eurozone The area that shares the single currency saw its economy tank by 11.8% in the second quarter of 2020, and it was hit because of those strict lockdown measures. Economists predicted that a rebound in the second half of 2020 will arrive, and it looks like it is now arriving. And this could mean that more lockdowns are going to be taken in place in Europe, and also places like Spain and Lyon, France, and Israel as well in the Middle East. These new lockdowns are going to create more problems for the economy as a whole, because as we saw during March, when all these businesses closed down, most of the economy just tanked, and a lot of these businesses went bankrupt. In fact, 2020 was the largest, it was the year that saw the largest amount of bankruptcies, and I just did a video on that. You guys can take a look at it. I'll put a link in here so you guys can go check it out. But if this thing continues and if we get another second lockdown, I believe that we will see even more mass layoffs, more bankruptcies, and more economic turmoil, unless the government steps in and passes some kind of bill to help the people with the stimulus packages. And also another news, Fed's Rosengren says that U.S. could face a credit crunch by year end if the virus worsens. The U.S. economy could face more foreclosures and business bankruptcies in the fall and winter if there is a rise in infections and no additional fiscal aid continues. And community and regional banks could especially come under stress if there is a rise in the delinquencies in commercial real estate loans as businesses struggle to stay in operation, Rosengren said. Businesses and more companies to shut down if these virus levels increase and get higher. Not to mention that because of all these protests that are going on in Louisville, Kentucky, there's a lot of issues regarding that as well, because people are not staying apart from each other, and it's just spreading the chaos and the violence and all of the turmoil that's happening around the world. He said that this unemployment rate needs to drop to 7.6% this year, or else it could contract by 3.7%, and it is not that far away from what Goldman Sachs said, that the economy is not going to grow by 6%, but it's going to drop to 3% for the fourth quarter of 2020. And another news, which is a little troubling here, insiders are selling stocks at fastest pace since 2012 in the market dip. So a group of investors who correctly timed the stock market's bottom in March isn't bargain hunting yet during the current sell-off. Instead, they're stepping up sales, flashing an ominous signal to any dip buyers. While factors other than valuation can influence insiders' decisions to sell, the action from this cohort, likely the most knowledgeable about their own business, is hardly encouraging news. According to this article, insiders sold about $975 million worth of shares last week, more than double the previous week, according to Securities and Exchange Commission data compiled by Bloomberg. So that's a lot of shares being sold by insiders. I don't know what that means, if that means good news for the people, or if that just means that they know something that the rest of the people don't know, and they're just getting out of Dodge and trying to cash in on their profits and sit on the sidelines until there's another dip, until things settle down, and then maybe that'll be a good buying opportunity later on. Who knows? I just wanted to close with this outlook as to what's really going on in November. There was a person who wrote this, and he said, imagine this in November. The US has 100 cities descending into what looks like the start of civil war as patriots turn out to stop Antifa burning down middle America. And I really don't like getting into politics on this channel, but I think this is beyond politics. I think this is going to impact every single person in this country if we don't do anything about it. But I think that with the violence that is going on and all the crime that is increasing, I think every single person will be touched by this, by what's going on around this country and even around the world. And for the Brits, Brexit has caused problems at the ports. Among other things, some foodstuffs are not getting through. Germany's economy has cratered after the EU stopped them exporting cars to the UK. And then Deutsche Bank collapses, and this initiates a global banking crisis. Europe has no way of saving its banks as all the European economies are so damaged, and 20% of workers have already been laid off. And now there will be even more layoffs as a result of this new restrictions and closures coming down in the fall and winter. It's a Greek-style banking crisis on steroids. People are pulling out cash in the expectation of daily cash limits. Physical gold will have already disappeared from the marketplace. And the banks will have already pulled the plug on their most vulnerable customers, the airlines. So virtually no planes are flying. Dover is jammed up with lorries lining the approach roads, so no one can leave blithely. And if you did, the emergency measures intended to preempt COVID's second wave require you to be kept in quarantine at your destination. Locked down in a hotel under military guard, as in Nazi concentration camps, for 4 weeks at your own expense and with frequent testing to ensure you are not a carrier. With full biometric data being collected and filed on the EU-wide register. They're collecting all this information on people, and they want to gather people into quarantine so that they are limited in their roaming about and being free to do whatever they want. So guys, we're living in some really tough times. I think there's a lot of volatility and uncertainty in the economy, and that's why investors, I think, are pulling out, waiting for things to settle down. With the stimulus package, with the second wave of the coronavirus, with new bankruptcies and higher unemployment rates, as we saw today, unemployment rate jumped again to 870,000. People filing new unemployment benefits higher than last week, and we could be seeing this to continue to get even worse and worse. But I'll give you guys an update again, and I'll keep you guys abreast of what's really going on. I hope you guys like this video. Please like it and subscribe to my channel. I'll see you guys in the next video. Thanks for watching.